All right. First, my name is Asiwaju Dayo Bello. Of course, students popularly call me Asiwaju. I'll be taking some aspect of performance management. Of course, the class started on Monday with the first lecturer, Adejuwon. Let me also say that the impression created about this subject, performance management, is not entirely truth. What is this impression? That performance management when you get to skill levels, to that view, what does performance management entails? What I expect students to do first is to look at the syllabus, what performance management is trying to address. In ICANN syllabus, it was clearly stated, for you to do performance management, 3 things must be addressed. For you to be able to write performance management with proficiency, you must be skillful in 3 areas of knowledge. One is you must be very good with cost accounting. Performance management draw part of its strengths from cost accounting topics. Number 2, you must understand management accounting. And number 3, you must understand quantitative techniques. Your syllabus clearly states this out. Performance management is sitting on 3 things: cost accounting, management accounting, and quantitative techniques. These 3 knowledge will help you to be able to address the subject performance management. Having said that, the topic we are going to be taking today is an aspect of cost accounting. And the topic is cost estimation. As an accountant, you must understand how to estimate cost. Like I said in my message this afternoon, this topic is not a standalone. This topic has relationship with virtually all the topics in performance management. What am I trying to stress here? Of costing or cost estimation.
Once I enter their house.
Dora, please, can you mute? All right, thank you. Please, can you mute, Dora? Now let's continue. The knowledge of cost estimation will have impact on your price theory. It will have impact on budgeting. it will have impact on variance analysis. Any aspect that involve cost estimation can have impact on that aspect. And behold, there's no topic in this performance management that does not involve cost. That means we must diligently try to understand this topic. Now let's go to the business.
It's my class. Yeah? Our class, yandu. Unless in Pukakulung pa our film ga.
No, please.
Okay.
T-Babe. Different name, T-Babe. Now let's go on with the class. Now, what is cost estimation? Cost estimation can be defined as the measurement of historical cost. Cost estimation can be described. Olumayowa, please, can you mute? Thank you. Some might not be aware that their speaker is on. Now let's go back to it. Let me expand this more. That's too big. Let me take it to 14. Okay. Cost estimation can be described as the measurement of historical cost with a view to helping in the prediction of likely future costs. Let's take that again. Cost estimation can be defined as the measurement of historical costs. Historical costs. You classify historical costs. You measure the costs with a view to helping you to predict likely future costs, so as to aid management planning, control, and decision-making. Why are we interested in cost estimation? Why is companies management trying to estimate future costs? This is to help management in planning, cost control, and to aid decision-making. Let us look at an illustration to this. Look at equity professionals. Prior to the commencement of these diets, the management need to plan ahead. We need to plan, and this planning will involve costs. We need to know what is the likely number of students that we enroll Are we expect, Peter, are we expecting 10, 20, or 30? Why is management interested in knowing the likely number of students that we enroll for this lecture? For our physical class, normally we prepare study pack prior to student resumption. Now, management, we want to know how much are we going to budget for the printing of student study pack. We now fall back to our cost information system. We look at the previous cost incurred. We are now looking at historical costs. We look at the cost incurred last diet as regard printing of student study pack. We are going to measure the costs. Let's assume last diet, Equity Professionals has incurred 2 million for the printing of student study pack. We now measure historical costs with a view to be able to predict likely future costs to be in printing of student study pack against November diet. Look at it. We are reviewing historical costs so as to aid our planning. We are planning ahead for November diet. As at the time of drawing our plan, we don't have any student number. We have only done a projection. We expect an average of 50 students. We now ask ourselves, what is the likely cost to be incurred for the printing of student study pack? We are using historical costs to be able to estimate likely future costs. Please remember, the purpose of cost estimation is to guide management planning, to assist management in cost control, and to aid decision making. Having explained this, the knowledge of cost behavior an understanding of cost behavior is a prerequisite for cost estimation. What are we trying to emphasize here? For you to be able to estimate future costs, you must have an understanding of cost behavior. How does cost behave? What is cost behavior? Cost behavior explains how costs behave in relation to the volume of production. If you recall, from our knowledge of cost accounting, there are 5 ways of classifying cost. From our knowledge of cost accounting, there are 5 ways of classifying cost.
Hello, Ashwaju.
Yes, please.
Are you aware that this lecture can continue, stop and continue? Or is it my side here?
Please, can I confirm? For my side is running perfectly.
It's
Okay,
actually breaking, sir.
It is breaking.
It's actually breaking.
Really?
Yes, sir. It's actually breaking, sir.
Almost 3 times now since we started. Almost 3 times.
Okay, if I'm talking, there will be breaking communication.
Yes, sir.
Yes.
Wow. Okay, let's see. Let's see how it goes now. I will do a recap of what I've explained. Cost estimation is the measurement of historical cost with a view to helping management to predict likely future costs. The purpose of cost estimation is to aid management planning, control, and decision making. I went further to say an understanding of cost behavior is a prerequisite for cost estimation. That implies that for you to be able to estimate costs, you must understand how costs behave in relation to the volume of production. I also mentioned that there are 5 ways of classifying costs. One is fundamental classification. You can classify cost into direct cost or indirect cost. The second classification is classification by function. You can classify your cost into cost, labor cost, and overhead. The third classification, you can classify your cost into product cost or period cost. Product cost, these are costs incurred to achieve production, while your period costs are costs incurred that are related to time. Period costs are essentially your fixed costs. Number 4 classification, you can classify your cost into production cost and non-production cost, or manufacturing cost and non-manufacturing cost. The number 5 classification is what we call classification by cost behavior. When we say classification by cost behavior, it's how costs behave in relation to the volume of production. Under classification by behavior, you have variable cost. Variable costs that vary in direct proportion with the volume of production. Let me take that again. Variable costs. These are costs that vary in direct proportion with the volume of production. The more we produce, the more variable costs incurred. The more production, the more total variable cost incurred. A good example of variable cost is your direct material cost. Material cost. The more you produce, the more raw material you are going to consume. Hence, the more raw material cost will be incurred. Now we have fixed costs. These are costs that remain fixed in total, regardless of the volume of production. Fixed costs, these are costs that remain fixed in total, regardless of the volume of. Whether you produce 1 or you produce 2 or you produce 100, the total fixed cost remain unchanged. It is not affected by volume of production in a short run. Now, in between variable costs and fixed costs, we have mixed costs. These are costs fixed and partly variable. In summary, for you to be able to estimate costs, you must be able to understand variable costs, costs that vary with the volume of production, fixed costs, costs that remain fixed in total, regardless of the volume of production, within a given activity range. Please note, we are not saying fixed costs will not change. Fixed costs can change, but this change will not be as a result of production volume. Let me repeat that point. Fixed costs can change, but not as a result of the volume of production. A good example is rent, business rent. If you rented a factory for production, the annual rent you pay is fixed. Whether you produce, however, passage of time, the landlord can increase the rents. With passage of time, the landlord can increase rent. That means the increase in rent is not as a result of the volume of production. All right, please, can we confirm? Are we still having that break?
No, sir.
No, sir.
All right, thank you for speaking out. I wouldn't know there was a break because I was just, although I was actually trying to reduce the pace. I was trying to reduce the pace of my lecture with an intent to ensure that students can key into the understanding. All right, let's go on. What are the methods of estimating costs? Estimating costs. Basically, there are 5 methods. Basic method of estimating costs. 1, engineering method. The engineering method is otherwise known as work measurement method. This estimates The engineering method estimates cost by evaluating the relationship between inputs and outputs in physical terms. I'll take that again. The engineering method estimates cost by evaluating the relationship between inputs and output in physical terms. Let's explain that briefly. If, for example, you plan to produce a cell phone, you are planning to produce a cell phone, you can engage an engineer who is familiar with the technical requirements of that product. Look at the illustration. You want to produce a cell phone and want to use engineering method to estimate the cost of production. I want to produce cell and I want to use engineering method to I will now engage the service of an engineer who is familiar with the technical requirement of that phone. The engineer will give me the quantity of materials required, the labor and machine hour required to achieve the production of the phone. Technical engineer now. He will now tell you what are the materials required to produce this phone. What is the labor requirements? What is the machine requirements? Now, having identified all the components required, prices and rates will be applied to the physical item. Prices and rates will be applied to the physical item in order to obtain the cost estimates. This method may not involve calculation at your level. But please note, this method is useful for estimating cost of repetitive processes where input and output relationship are clearly defined. Please note this word. The engineering method is useful for estimating cost of repetitive processes where inputs and output relationship are clearly defined. Second method, please let us feel free to ask questions. Number 2 method, the account analysis method. Unlike the engineering method, the accounts analysis method uses the information contained in the ledger accounts. Unlike the first method we mentioned, the accounts analysis method uses information contained in the ledger accounts. This information are evaluated and categorized into 6 or variable cost. The information contained in ledger accounts will be analyzed and categorized into variable costs or fixed cost or mixed cost based on the personal judgment of the accountant. Based on the personal judgment of the accountant. What are we trying to explain here? As an accountant, I can use my knowledge to classify cost as direct, to classify cost as variable or fixed or mixed cost. If you ask me, lecturer fees is a fixed cost. In equity finance, in equity professional, I can classify the costs we have. In fixed cost or mixed cost. Our lecturer fees, our lecturer pay is a fixed cost. Whether we have 1 student or we have 10 students, we are going to pay the lecturer the same amount we have agreed. If only 1 student has enrolled for this lecture, we are going to pay lecturer the agreed fee. That means lecturer pay is not dependent on number of students. I can use my personal judgment as an accountant to classify lecturer fees as a fixed cost. Now look at cost of printing student study pack. That is more like variable cost. The more students we have, the more study pack we are going to print. Hence, cost of printing student study pack vary directly with the number of students. Hence, I can classify printing cost as a variable cost. I'm now using my personal judgment to determine which cost is variable, with a view to be able to estimate likely future costs. Peter, no.
Sir.
Please mute. Or you have any question?
No, sir.
Okay, please mute. Thank you, sir. Number 3. Please note, there could be problem with account analysis method. It is based on the personal judgment of the accountant. It may be difficult to classify some costs, whether variable or fixed. Okay, imagine. How do we classify the cost incurred for our marker, or the cost incurred for this Zoom class? Management, we have to pay me for this data now. How do you classify the cost? I have to buy data to run this class. That means equity professional management must pay me this. Are you going to classify that as variable or fixed? So at times it might be difficult to use your personal knowledge to determine the true nature of a cost. Now we have to pay Zoom for this lecture. Now, the amount we pay to Zoom can be a fixed cost or can also step up if the management has paid for just 50 numbers. That is up to 50. Nobody can join the class again. Above 50, we might need to pay more subscription to accommodate students. So at times it might be difficult to classify some costs as variable or fixed. Let's move on. Number 3 method, scatter diagrams. Recall, I said performance management, you must have 3 areas of knowledge: cost accounting, management accounting, and quantitative techniques. Back to our discussion. Number 3 method of estimating cost, scatter diagrams. This method involves plotting on a graph the total cost for each activity level. This method involves plotting on a graph the total cost of each activity level. The total cost is represented on the vertical axis, while activity levels are recorded on the horizontal axis. A straight line is fitted on the scatter of plotted points. Visual approximation. For some of us that we have background in QT, quantitative techniques, you can use scatter diagram to predict, to draw a trend in costs. You can use scatter diagram, a graph. On your vertical axis is the total cost. Total historical cost for each activity level. You can now look at the trend. You can use the trend to predict likely future costs. But please note, this is a subjective method of estimating cost. All right. Any questions so far? No. Okay. Now, let me say clearly that the first 3 methods we have explained, no calculation is involved. However, the next 2 to be discussed will involve calculation. So, the high and low method. The high and low method is a method that uses 2 extreme data points to determine the value of A, the fixed cost portion, and B, the variable rates in the equation y is equal to A plus bx. I will take that again. The high and low method is a method of estimating cost that uses 2 extreme data points to estimate the values of A. Letter A represents the fixed cost, and B, letter B represents the variable rate per unit. in the equation y is equal to a plus bx. This equation represents a cost function where your letter y represents your small letter a represents total fixed cost. Your small letter b represents variable cost per unit. And x represents volume of production. This equation can be used to determine total cost, total fixed cost, and variable cost per unit. Please note this very well. 3 conditions must exist for you to use high and low method to estimate cost. Deliberately, I'm keeping the pace of that lecture to enhance understanding. 3 conditions must exist for you to use high and low method to estimate cost. Condition number 1, there must be activities at the highest level and the lowest level. It means you must have highest production level. You must have lowest production level. Have highest activity level. You must have lowest activity level.
The line is breaking.
Okay? I'll come back with this. I think it's network, really. It's network, not me. But we are going to manage it. Now let's go on. I said 3 conditions must be in place.
Whose network is it? If it's to help.
Okay, this should be Latif, right? Now, as you are speaking, it's breaking.
Exactly the same thing we are experiencing. Sometimes it will happen for almost 7 seconds before it will continue again.
Hanging, because my side is not actually hanging.
Since you have started, Ezra, since you have started, the lecture have shut down for almost 8 times. Me from my own side here.
It's your network.
Yes, I believe it's his network. Okay. It's been very clear at my end, though.
Check your network.
It's his network.
Okay, thank you.
At least you can attest to it. I've never logged out of this since I started the lecture. So I can attest to this. It's individual network. But like I can assure you that you are going to get value for your money. Well, let's go on. I was trying to explain the conditions for high and low method. For you to use high and low method to 3 conditions must be in place. Condition number 1, there must be activity at the highest level and at the lowest level. That is condition number 1. It means that you must have highest production level and you must have lowest production level. Condition number 2, the variable cost per unit must be constant at all levels, whether highest level or lowest level. The variable cost per unit must be constant. If it is 100 naira per unit, whether you produce at higher level or you produce at lower level, the variable cost per unit must be constant. If I produce a bottle of Coke for 100 naira, that means if I produce 2, that will become 200 naira. That means variable cost per unit is constant. If I produce 3 Coke, that becomes 300 naira. The variable cost per unit must be constant at all levels. Then condition number 3, the total fixed cost must be the same, either at the highest level or the lowest level. The total fixed cost must be the same, either at the highest level or the lowest. Please note, if any of this condition is not present, then you are going to make adjustments before you can use high and low method. Hello? If any of this condition is not present, then you are going to make an adjustment before you can use high and low method. Now, what are the steps? What are the steps involved if you are to use high and low method to estimate costs? What are the steps involved if you are to use high and low method to estimate your cost? Step number 1, select the highest output and the corresponding cost. You are going to select the highest production level and the corresponding cost. Please note, this may not necessarily be the highest cost. That point is clear. You are going to select the highest production level and the corresponding cost. The corresponding cost may not be the highest cost. Step 2, select the lowest output level and the corresponding cost. The corresponding cost may not be the lowest cost. Please note that. Next, step 3, calculate the variable rates. That is the variable cost per unit using the formula below. Look at the variable rates. Differences in cost divided by differences in activity level. Please note, your activity level is the production level. So you are going to determine differences in cost. You are going to determine differences in activity level. You now divide the differences in cost by difference in activity level. That will give you the variable rate. Once you derive the variable rate per unit, you can now calculate your total variable cost. Total variable cost is number of units produced multiplied by the variable rate per unit. Total variable cost is the number of units produced multiplied by the variable rate per unit. Then step number 4, calculate the total fixed cost.
Sorry, sir. So please can you remove there's something obstructing. Yeah, thank you.
Oh, okay. I don't need to have it said. It's better, right?
Yes,
Then
sir.
step
Thank you.
number 4, calculate total fixed cost. The total fixed cost is equal to total cost minus total variable cost. Those are the 4 steps involved. Lastly, where inflation makes the cost in each period incomparable, if there's inflation and you want to compare costs, you are going to first of all adjust the inflation out. If examiner says there's inflation in that cost and you are trying to estimate cost, you are going to first of all adjust that inflation element, a means of price index, price level index. When we get to calculation, please asterisk this. In the course of our lecture, we are going to be able to take question on how to adjust inflation in cost. Lastly, as regard high and low method, one major limitation of this method is that it only considers 2 extreme data points. It only considers the highest level and the lowest level. It ignores other levels. So using this method may not give you a realistic estimate. Hello, please note that. High and low method uses 2 extreme data points, the highest level and the lowest level. It ignores other activity levels. Because of this limitation, the method may not produce a realistic estimate. In case you are asked, please note that. Now the last method is number 5, regression analysis method. The regression analysis method The regression analysis method is otherwise known as the least square technique or method. It is a statistical method. The regression analysis method is a statistical method of estimating costs using historical data from a number of previous accounting periods. I'll take that again. Regression analysis method is a statistical method of estimating cost using historical data from a number of previous accounting periods. This method can be used to regress Y, dependent variable, on X, independent variable. This method can be used to regress dependent variable on independent variable. This method can be used to determine the line of best fits. The method, all available data, unlike high and low method, regression analysis method is a more realistic method of estimating cost. Unlike the high and low method, regression analysis method is a more realistic method of estimating likely future costs. It uses statistical formula to determine the variable cost represented by letter B and the fixed cost represented by letter A. Please let us note the formula. You may write it down. There's no crime in jotting in the online class because some might be sleeping. It's not a crime if you're in the online class. Assume you are in a physical class. It's a crime if you jot down. Please look at the formula. We should be used to this from previous knowledge of our statistics. Albeit, we are still going to explain it and practicalize it, all things being equal. Let's round up. Nation is fine.
Please, can you go back to...
Okay.
Hello, sir.
Yes, please.
Please, can you go back to just a recap on the regression analysis method?
Okay,
just
fine.
To recap,
No problem.
I missed some.
Okay, no problem. That's fine. That's fine. Now, we said regression analysis method is also known as least squared method. This is a statistical method of estimating cost using historical data from a number of previous accounting periods. You are using statistical method to estimate future costs using past data. This method can be used to determine the line of best fit. It uses statistical formula to calculate the variable cost per unit. Look at this. This formula can be used to calculate the variable cost per unit or the variable rate per unit. Your B is equal to N summation XY minus summation X summation Y divided by N summation X square minus summation X into bracket square. Now, please note, the small letter N, please, you can take this down. The small letter N represents number of observation. I can even put it here. N equal to number of observations. Your letter S is the independent variable. Independent variable. Usually your total cost. Your total cost. Oh, sorry. Your letter Y. Letter Y, dependent variables. Usually the total cost. Your letter X is an independent variable. Usually your volume of production. Volume of production. You can note this. Letter B, using the equation of is the variable rate per unit. Is the total fixed cost. Yes, let me look at the charts. Okay, you can go ahead with your question, Mr. Latif. You can drop the question on the chat, or you can speak, no problem.
Hello, sir.
Yes, please.
Is it likely that we'll have this video for tomorrow? Because it is best that I log out and go away. I don't enjoy the way
your area network is not friendly, right? You stay in Nigeria.
Yes,
where do you stay?
Is it likely to have a recorded class tomorrow?
Yes, it's very likely you get it tomorrow morning.
Thank you, sir. Thanks.
Good evening,
all right,
sir.
sir.
Good evening, sir.
Yes. Oh, Messi.
Yes, sir. Sir, in the formula, I can see we have small x and we have big X, especially the one having the raised to power 2.
It's an error.
Okay, it's an error.
Is that clear? Yeah, they should all be big. It's
okay,
just so Y is Y, whether capital letter or small letter.
Okay, sir.
Thank you for the observation. So let's be consistent. It can be for some location, the connectivity can be bad. All right, let me round up with conditions for linear regression analysis. Please also note, also call it linear regression analysis. One is there should be an underlying linear relationship between the two variables. There should be linear relationship between the two variables. What does this mean really? One variable must be dependent on the next variable. I can test the impact of advertisement on sales. I can use regression analysis to look at the impact of advertisement on sales. I want to look at it. If we increase our advertisement cost, what is the impact on the volume of sales? Sales is dependent on all things being equal. Sales volume should be dependent on advertisement. The more publicity we are able to give to our products, the more demand for our product, all things being equal. Are there any question? Okay. Point number 2. Historical cost data should be adjusted to a common level if there's inflation. I've mentioned this before. If you are trying to estimate cost and there's inflation between two periods, you are going to adjust the inflation first. Point number 3. As far as possible, historical costs should be accurately recorded so that variable costs are properly matched against items produced, and fixed costs are properly matched against the time period to which they relate. What this point is trying to stress is company must maintain an adequate costing system that accurately record costs. The variable cost can be matched against item produced or sold. The fixed cost can be matched against period. Number 4, management should either be confident that conditions which existed in the past will continue into the future. Let me expand this. You want to use historical cost to predict likely future costs. You must have confidence that the conditions that existed in the past will continue to the future. If this condition will change, the management must make amends or amend the estimate of costs produced by the linear regression analysis to allow for expected change in the future. One of our responsibilities as an accountant is to provide information to support management decision. The information you are providing, management must have confidence in that information. If you are supplying cost information to management, the cost information you are supplying, you are drawing the cost from previous cost. Now, if you are using previous cost to predict future cost, then you must have the confidence that the conditions that existed in the future will continue to the condition that existed in the past will continue to the future. If conditions are likely to change in the future, then you, in your cost estimates, let me illustrate this briefly. Assuming last diet, equity professional incurred 2 million to print student study pack last year. Now, we are now planning to print study pack this year. Definitely, I cannot look at last year condition because inflation rate is higher now. The rate at which cost is rising is at a geometric rate compared to last year, prior to the coming in of these governments. Just imagine January last year, before the advent of these governments, costs were not this high. That means conditions that existed in the past will not continue in this future. I cannot use that cost. I'm going to make adjustment that cost estimates to be able to accommodate the current condition. May God give us a better. Lastly, as with forecasting process, the amount of data is very important. To reduce forecasting error, it is good to increase number of your data sets. Right. The explanation has been given. Any question, please? Any question? Okay. Let us look at illustration, this question. Is 2 questions in 1. If you can finish tonight, fine. Any volunteer, can somebody read?
Screw up, sir. Screw up.
Okay, I'll bring it down. All right.
Ekwakete Industries Limited operates 2 factories, one in Agape and the other in Ikeja. The factory at Apapa is producing output in excess of sales demand.
Sorry, please, sorry. This should be Apapa.
Okay, Apapa.
It's an error. That will not create problem.
Okay, sir.
Right, please. Let's go ahead.
The factory at Apapa is producing output in excess of sales demand, and it will be necessary to reduce output in the next period from the current 90% level of activity, 11,700 units, to
Okay, noted.
75%. The factory at Ikeja is also currently working at 90% level of activity, 8,100 units of a different product. But due to heavy sales demand, it is intended to increase output to 115%. You are
Okay.
given the following information about costs.
Apapa factory.
Apapa factory, the direct materials, direct labor, production overhead, sales volume in units, sales price per unit. Ikeja factory, direct method, direct labor, production overhead, sales. Required.
Require
A statement to show the expected marginal cost, contribution, and profit for each factory at the proposed level of activity. B. A brief explanation of why your approach to estimating the cost should differ for each factory.
All right. Thank you. Tife, right?
Yes, sir.
All right. Thank you so much. Text is original question. This volume was not given. So I'm going to take it off. Wasn't given in the original question. This is not included. Like she read the question to us. If you look at the requirements, there is nowhere in that requirement that says estimate cost for me. There's no, if you look at the question, there's no aspect of this question that says estimate cost. The question says required, prepare a statement to show the expected marginal cost, contribution, and profits for each factory at the proposed level of activity. As a student, I will now ask myself, what is marginal cost? What is contribution? And what is profit? The question didn't say estimate cost anywhere. We now ask ourselves, what is marginal cost? From our knowledge of management accounting, marginal costs are all variable costs. From the perspective of the accountant, maybe I should make it that way. Marginal cost can be defined in two ways. From the perspective of an accountant, marginal costs are all variable costs. Costs that vary in direct proportion with the volume of production. That's my marginal cost. Please note that from the perspective of an economist, marginal
Come again,
cost.
sir. From the
All right,
perspective of an open accounting.
Marachi. Don't know, I like that name, Sha. I will take that again. From the perspective of an accountant, marginal costs can be defined as all the variable costs. Costs that vary in direct proportion with the volume of production. Is that taking place? Second definition. From the perspective of an economist, marginal cost is the additional cost.
Sorry, I missed the first one. Please, can you take it again?
Okay. Okay. Let's go to it again. I said there are two perspectives as regard definition of marginal cost. The first perspective, from the perspective of accountants, an accountant, marginal cost is all the variable costs incurred Is that taking place?
Yes.
All right. From the perspective of an economist, marginal cost is the additional cost incurred as a result of producing an additional unit of a product. Please document this very well. Our next topic, by God's grace, price theory. This will come back to you. So we are accountants. So we are going to look at marginal cost.
Hello, sir. Come back again of the economics. Marginal
As a
cost
result of what, sir?
Amarachi Messi, can we listen now?
Yes, sir.
Perspective of an economist. Marginal cost is the additional cost incurred as a result of producing an additional unit of a product. Marginal costs, from the perspective of the economist, is the additional cost incurred as a result of producing an additional unit of the products. All right. Now we are going to solve this question from the perspective of economy, from the perspective of accountants. That means we are going to identify all the variable costs. We are going to group all the variable costs together and total it. That will now give us our marginal cost. Next, what is contribution? Contribution is the difference between state value and total marginal cost. Contribution is the difference between sales value and total marginal cost. That means for me to compute contribution, I'm going to get the sales value, and I will now deduct the marginal cost from the sales value. That will now give me the contribution. Profits. I'm trying to define all the variables we are required to calculate. Profits. Our profits is the excess of contribution over fixed costs. Our profits is the excess of contribution over fixed cost. That is the difference between fixed cost will give me profits. We have defined the three main components we are required to calculate. Recall, the question didn't say define. The question said prepare a statement to show the expected marginal cost, contribution, and profit for each factory at the proposed level of activity. But to enhance understanding, we have defined each component. We now go to individual factory. We start with Apapa factory. Let's look at that. I will take the question quickly. Eko Akete Industry Limited operates two factories, one in Apapa, the other in Ikeja. The factory at Apapa is producing output in excess of sales demand, and it will be necessary to reduce outputs in the next period from the current level of activities. The current level of activities is equal to 11,700 units. We are going to reduce to 75%. The factory at Ikeja is also currently working at 90% level of activity. In brackets, it's equal to 8,100 units of different products. But due to heavy sales demand, it is intended to increase output to 115%. Apapa factory cost, we have 80% activity level, we are giving the cost. We have 90% activity level, we are giving the cost. We have 100% activity level, we are giving the cost. Now we now want to get cost at 75% activity level. That is Apapa. We now want to determine what will be the cost. What will be the direct material cost at 75% level of activity? What will be labor cost at 75% level of activity? What will be the production overhead at 75% level of activity? And we are going to break this cost into marginal cost and fixed cost. Now let's focus on Apapa first. Now, part of our solution, we are going to support it with with what's it called? Digital board. The solution will also come with digital board, but to solve more questions, some we are going to use the solution we have gotten. So please allow my digital pad so that we can start this solution together. We can solve it together in the class. Please confirm you can see the whiteboard being shared. Hello?
Yes, sir. Yes, sir.
Yes.
Fair. Okay. Now, we are going to navigate between the two screens. As much as possible, we are going to try to manage the time. Now, we are going to take this step by step. Now, I'll start with step 1. I'm giving 3 Apapa factory. At my Apapa factory, okay, I'm giving 80% activity level. Examiner gave us 90% activity level. At this level, volume of production is 11,700 units. We have 80% activity level and we have 100% activity level. Now you are now going to determine at 80%, what is the volume of production? How do you do this? That is your working number 1 now. Examiner, this is given to us. This is given. At 90% activity level, volume of production in units is 11,700. You are now going to determine at 80% activity level, what is the volume of production? How do you work this? Please look at it. You are going to do like this. 80 over 90 multiplied by 11,700. Please work this out. What do you have? Please get your calculator ready.
10,400.
100 units. Now, at 100% activity level, you are going to work it like this. 100 divided by 90 multiplied by 1170. What do you have, please? That will give you 13,000.
13,000.
Thank you. Now, the proposed level. This is the proposed level. What we are trying to propose for Apapa factory is now 75%. So determine your what to be produced, volume. That becomes 75% divided by 90 multiplied by 11700. What do you have, please?
9,750.
9,750. This is your working 1. You are going to convert the percentage. You are going to work out number of units. Then you're working 2. Your working 2 is to determine the call. We said an understanding of cost behavior is a prerequisite for cost estimation. You must determine how cost. In that question, we have three costs. We have material costs, we have direct material cost, we have direct labor cost, and we have production overhead. So you are going to take individual costs. You are going to ask yourself, is direct material cost a variable cost, or a fixed cost, or a mixed cost? For you to answer this question, we are not going to do small working. Look at the working place, working 2. This is your working 2. Direct material cost. Please don't mind my writing.
No.
Look at the activity level you are giving. Activity level. You are giving 80%, 90%, and 100%. At this level, unit is equal to, at 80%, the unit is 10,400 units. At 90%, the unit is 11,700. At 100%, the unit is 13,000. Now, direct material cost. Now let's go to Apapa factory, to the question. Look at it, please. For 80% level, direct material cost total is 72,800. Please note that at 90% level, material cost is 81,900. And at 100% level, total material cost is 91,000. Let's move back. You pick that. Total for 80%, 72,800. Is that correct?
Yes, sir.
Total for 90%, how many?
It's 1,100.
81,100.
It's 1,909, not 100. 900.
No, it's okay. It's fine. Even me self, I didn't even remember myself. 81,900. Okay, we are going to take it now. 81. Let me change this. 81,900. Total for 13,000.
91,000.
91,000. Please, all these are in for their cost. Now get material cost per unit. Material cost per unit. That means you are going to divide 72,800 by number of units produced 10,400. Please divide.
Seven
Naira per unit. Now go to the next level. Divide 81,900 by 11,700. What do you have?
7
Naira, please. Divide 8, go to the 100% level. Divide 91,000 by 13,000. What do you have?
7
Naira.
Please put naira, 7 naira. Can you see? Material cost per unit are constant at all levels. Is that not?
Yes, sir.
Whether we produce 80% level, material cost per unit is 7 naira. Whether we produce at 90% level, material cost per unit is 7 naira. Whether we produce at 100% level, material cost per unit is 7 naira. Please note, once cost per unit is constant at all levels, that cost is a variable cost. Hello?
Sir, please come again.
I will come again. Please note, once you have a cost and that cost is constant per unit, constant per unit at all the activity level, that cost is entirely a variable cost. In other words, direct material cost is entirely a variable cost. Please put it in your book like that. Based on what we have computed, direct material cost is a variable cost. Next. Our working continue. Working 3. You move to direct labor cost. You have to text. Again, you are going to get the activity level. The activity level. You have 80%, 90%, and 100%. At this level, unit is equal to 10,400, 11,700, 13,000. Now go and pick your total direct labor cost for Apapa. Let's go to it together, please. Look at it, please. Direct labor cost at 80% level. This is equal to 62,400. Please note that. At 90%, 7,200. At 100%, 78,000. Let's go back to our working material. This is 78,000. This is 7,200. Am I correct? The first one is 62 what?
62,400.
Now determine direct labor cost per unit. Direct labor cost per unit. Please work. Total labor cost divided by number of units.
6 naira.
This is 6 naira per unit. Then next, please check. Let's be part of the class.
Naira.
6 naira per unit. Please check this also.
6
6
naira.
naira. What can you see? Cost per unit is constant at all levels.
Yeah.
Can you see it?
Yes,
In this
sir.
case, direct labor cost is also a variable cost entirely. In this case, direct labor cost is also a variable cost in totality. Then working for. We now go to production overhead. production. I will use OH, overhead. Again, you are going to get your activity level. You have 80%, 90%, 100%. At this level, units is equal to 10,400, 11,700, 13,000. Now let's pick production overhead costs. OH, let's go back to our first page. For Papa, look at it, please. At 80%, the overhead cost is 59,200. At 90%, production overhead cost is 63,100. At 100% is 67,000. Let's get it. 67,000, 63,100, 59 what?
67,000 for the last one.
I've gotten the last one.
59,200.
59,200. 200.
Thank you. Now, please compute overhead.
Sir, please adjust your screen to that, please.
Which are the area, please?
The area we are working on now, the production overhead.
It's there already.
Okay, yes, I can see it now.
Okay. Continue, please. I don't need you. Now, try to get production overhead cost per unit.
We have 5.692.
I'm coming. I want to show per unit. How much? 5 naira point
69.
69.
That's
Next.
7. Can't it be approximated?
No, please.
Okay.
Maintain 2 decimal. Next.
5.39.
5.39.
5.39.
Thank you. Next.
5.15.
5.15. You observe that this cost is not constant per level. It's not constant per unit.
Yes, sir.
Also, look at the trend. As the volume of production increases, the cost per unit falls. Can you see it?
Yes, sir.
Please note, when volume of production increases and cost per unit falls, it's an indication that that cost is a missed cost. Please allow me to take what I want to do. All right, let's go on. I will repeat that point. Please note, if the volume of production increases and cost per unit falls, that's an indication that that cost is a missed cost. It includes element of variable cost and fixed cost. I'll put a remark here in red. production overhead is a miscost. What it means is that this production overhead, we are going to now separate the miscost into variable and fixed. This production overhead contains element of variable cost, excuse me, and fixed cost. In this case, we are going to separate the cost into variable and fixed. To do this, in this question, we can use high and low method. We have the highest at 100%. Excuse me, please. And we have the lowest activity level, 80%. Recall, conditions for high and low. There must be highest activity level, and there must be lowest activity level. Production overhead cost will be separated into variable overhead and fixed overhead using high and low method. Look at the question. Examiner will not tell you the method to use. At this level, the examiner will not tell you the method to use. You are now going to ask yourself, because there's activities at the highest level and there's activities at the lowest level, I should be able to use high and low method to separate cost into variable and fixed cost. Is that clear, please? All right. I will open the second, I will share the second, what's it called? Come here. It takes two. Please confirm you can see my new screen being shared.
Yes, sir.
All right. No, this is too big. We continue from here. We now want to separate production overhead cost into variable and fixed. I'll come here. Now this is working 5. Separate production overheads using high let me use high and low method. No, this one is not. Using high and low method. Using high/low method. Record the steps. One, select the highest activity level. The highest level year of production units is 13,000. The unit highest level is 13,000. What is the corresponding production overhead cost at highest level? What is the overhead cost, please? Hello?
7,000.
Yeah, 67,000 naira and the corresponding cost. The lowest level is 10,400 units. What is the overhead cost here, please?
59,200.
59,200.
Look at it. You have selected highest level and the corresponding cost, lowest level and the corresponding cost. Next, get the differences. Differences. 13,000 minus 10,400. What do you have?
26.
2,600 units.
Yes, sir.
Difference between the cost, 67 minus 59,200.
7,800, sir.
7,800 naira.
Yes.
Now calculate your variable rate per unit. That is your variable cost per unit. Variable cost per unit. That is your variable overhead cost. So that your variable overhead cost per unit. This is equal to differences in costs. In cost divided by differences in activity. That is, this will give me my variable overhead cost. I'm trying to manage the time. The variable overhead cost per unit. Variable overhead cost per unit. Is equal to 7,800 divided by 2,600. What do you have, please?
3 naira.
3 naira per unit. Next, determine your calculate total variable cost. You can do it at any level. You can either use highest level or lowest level, any one you like. I can say at high level, comma, total variable cost is equal to, at high level, we produce 13,000.
Yes, sir.
And variable overhead cost per unit is 3 naira. I'll just come here, 13,000 units multiplied by 3. That will give me how much, please?
39,000.
That means out of this 67,000, total variable cost here is, total variable overhead is 39,000. What is total fixed overhead? Out of this 67,000, total overhead.
28,000.
Thank you. Just come here. Let me map out this place. I'll just map out this place. I'll just come here. My total fixed cost is equal to, at the highest level, 67,000 minus 39,000. This will give me 28,000. You can also test lowest level. Test lowest level to be sure that you are correct. You don't need to work the two. Now, at low level, you produce 10,400. Multiply by 3 to get total variable cost.
That's 31,200.
Now, thank you. Out of this 59,200, total variable cost is 31,200. What is total fixed cost?
28,000.
Can you see it? The fixed cost will be the same, whether at the highest level or the lowest level. Can you see it, please? The fixed cost will not change, whether at the highest level or the lowest level. You are done with all your workings. You can solve the question. You can prepare statement now. You are done with all your working. You can prepare the statement now. For Papa Factory.
I was working so good.
What happened? All right. Let's open another page to round up. Let's round up. I'll come here. Apapa Factory. Statements. No. I have to pick statements of costs, contribution, and profits. What is the proposed activity level at Apapa Factory? What are we proposing?
75%.
Thank you. At 75% activity level. At this level, what is the volume of production and sales?
9,750.
Thank you. Now start. 9,750. I'll put it here, 9,750 units. You start with your sales value. Sales value. We are going to produce and sell 9,750 units. What is the selling price per unit? Let's go to page 1. Now, again, let me quickly say in the exam, in the original question, this was not given. We derived ourselves. For you to derive it, the original question, this was not given to us. It wasn't given the original question. I will now derive it. If you look at 80%, at 80%, we sold 10,400. So total sales value 208,000. What am I trying to do? You are going to divide 208,000 divided by 10,400 to get selling price per unit. You are going to divide 208,000. Please look at it. At 80%, the company produced and sold 10,400 units. And the total sales value was 208,000. What is selling price per unit, please?
20 naira.
Good. Again, at 90%, the company produced and sold 11,700 to get a revenue of 234,000. Please, what is selling price per unit? Check.
$20.
Good. Also check. At 100% level, the company produced and sold 13,000 units to generate 260,000 naira revenue. What is selling price per unit?
20 naira.
That means selling price per unit at Apapa factory is 20 naira. I can come back here now. I will now say multiply by 20 naira. What do you have, please? What is the sales value, please?
195,000.
195,000. I will now come to my variable costs. All my variable costs. I will start with direct material costs. We are going to produce 9,750 units. What is material cost per unit that we calculated?
7 naira.
Please multiply by 7 naira.
68,250.
68,250.
250.
Then you move to your labor cost. Direct labor cost. It's also variable cost. We are going to produce 9,750 units. What is labor cost per unit?
6 naira.
Please multiply.
58,500.
Then you now have variable overhead. We are going to produce 9,750. What is variable overhead per unit?
3 naira.
Multiply, what do you have?
29,250.
39.
29,250.
Oh, sorry, 29.
250.
$29,250. You have picked all the variable costs. You now sum up. Sum all the variable costs. That will now give you your marginal costs. Please sum up.
156,000. 156,000.
That will give me 156,000. Examiner says, prepare a statement to show marginal cost. Examiner will mark this for you. You have showed the marginal costs. You put it in brackets. Then contribution. Your contribution is sales value minus marginal cost. What's your contribution, please?
$39,000.
Contribution is equal to 39,000. Remember, contribution is the difference between sales value and total marginal cost. Next, less your fixed production overhead. What's our fixed overhead cost? What's the fixed overhead cost?
28,000.
28,000. Get your profits.
11,000.
This is, you are done with Apapa factory. You are going to get your full mark for this aspect. Why do you say oh? What do you say who self? Is it Amarachi or Tia or Tife? Who is saying oh? Or is it Messi?
It's me, sir.
Tife, any problem?
No problem.
All right. Any question? We can't take effect Ikeja factory tonight. But you can attempt it. Let me even see how far you can go. We are done with Apapa factory. You now have Ikeja factory. You need to prepare. Please, you can challenge the question. Let me see how far you can go.
Sir, are we using the same method?
Okay. Examiner say prepare statements to show cost, contribution, and profits. Now, tell yourself, you are going to ask yourself, direct material cost, is it a variable cost or a fixed cost or a mixed cost? You are going to text the same way I have texted. When you are done, go to labor cost, also text. When you are done, go to overhead. You are going to first of all get your working one. You are going to get number of units at 80%, at 90%, at 100%, at 105, at 110. Then you are going to get at the proposed level 150. Stop exercising fear. Stop creating fear for yourself. All right, any question, please? I'll stop here tonight.
So are we going to send you the solution in your DM?
I will share the solution as soon as I finish the class.
Yes, sir.
Although solution is also available here, sure you know.
I know.
Are you aware?
When you said we should attempt it, so that's
So
what
what I mean
asking.
is, if you attempt it, when we meet next week, you know, if you try to attempt and to the next topic, but if I look at the performance, I can now say, okay, let me also treat it in class next week. But the solution is also available here.
Sir, if you don't get it, I'm asking that when we attempt it, should we send you what we attempted?
Of
That is
course,
not
share with me.
Okay, so how are we going to get the question?
The question is there already now. You know, you
In
have
the material you sent for us, sir.
yes now. You know, look at it. You read the question and look at the question. You know, we have solved. We have two factories. Look at it, please. Ekwa Akete Industry Limited operate two factories, one in Apapa, the other in Ikeja. Now we have solved the questions for Apapa factory. We have not treated Ikeja factory. It is this same question I'm referring to. Please read it. We have look at the requirement. Requirement says prepare a statement to show expected marginal cost, contribution, and profit for each factory. Now, we have only solved Apapa factory. That means we have not solved Ikeja factory. I'm now suggesting that you should attempt solving Ikeja factory. Is that clear enough?
Yes, sir. Yes, sir. It's clear.
So you can share solution with me. All right. If there's no question, may God give us a better understanding.
Hello, sir.
Yes, please.
Yeah, sorry. I'm taking us back a little bit. We did the high level, at the high level. That's the
High
total
and low
variable
method.
cost. Yes, the high level, at the high level that we got the 28,000 naira.
Okay.
Yeah, I'm asking, you said something about the low level.
Yes, I said high level to determine total variable cost, and we derive the total fixed cost.
Yes.
And now you can also confirm. Check the low level. Look at the low level. At low level, we produce 10,400.
Yes, sir.
Now, get total variable cost at low level. Multiply 10,400 by 3 naira. What do you have?
Times that is 10,400.
I'm waiting for you.
Hello, sir.
Yeah.
Did you hear me?
I can hear you, please. What do you have?
Okay, that is 31,200.
Now that is now look at it. Out
Hello?
of that is your total variable cost. Now look at it, please. The total cost here is 59,200. Now less 59,200 from 31,200. What do you have?
That is 28.
That is your total fixed cost. And I say that the total fixed cost will be the same, whether at the highest level or the lowest level.
Okay.
Do you understand?
Yes, sir.
But in exam, you don't need to be testing the two. Once you take one level, just compute. I'm only trying to tell you that
just to confirm,
at both level, fixed cost is the same. I hope that is clear, Amara.
Very well, sir.
All right. Any other question, please? Let's call it a good evening. God will give us a better understanding. All right. Good night and remain blessed.
Amen. Thank you, sir. Good night,
All right.
sir.
Thank you, sir.
Yes,
God
sir.
bless.